And at this stage, whether you have $10, $25, or $50,000, you're not just deploying capital and building a portfolio. You're building a machine. And like any machine, it needs to be mastered. It needs to be tuned, and it needs to be built with scaling in mind. See, this is where most people go wrong. They focus on returns based off isolation, but the wealthy focus on function. And here are the key metrics you want to focus on when scaling with returns in mind. The first is cash on cash return. How much capital does your investment portfolio generate relative to the amount that you put into it? If you're generating $400 per month on a $50,000 portfolio, that's close to about 10% annualized. That's serious cash flow. And it puts you light years ahead of someone who's chasing 8% annually without any cash flow. Track this, optimize it, and increase it over time. Number two is reinvestment efficiency. How easily can your cash flow be reinvested back into the system? This is where automated wealth actually shines. If your income lands daily, you have access to deploy that capital instantly back into the system, which means you're going to compound at an even compounded rate. This is why daily yields matter way more than what people think. If I can cash flow daily and put it back into the system, I'm going to compound 10 times faster than if I were to do it weekly, monthly, or quarterly. The faster your system feeds itself, the faster that it grows. Number three is liquidity versus lock-in ratio. Now, you don't want a portfolio that's locked for about 5 years, but you also don't want 100% just sitting in cash doing nothing. You want to track your liquidity ratio. How much of your capital can actually be released back into cash within 72 hours? Ideally, you want about 40 to 60% liquid or more. This will allow you to take capital out and deploy it into new opportunities that come across your deck fast. Number four is scalability multiplier. Can your portfolio scale 10x with minimal changes? If you added another $100,000, would it just sit in your bank and do nothing? Or would you have a system and a structure to deploy it with confidence? That's the real test. You need to think like a fund manager. If your system works at $50,000, it should work at $500,000 with the same logic, same levers, but just a better return. And the fifth metric you want to look at is time to financial independence. Forget fire calculators and vague retirement dreams. Instead, calculate this. How many months of living expenses can your portfolio generate annually? If you're generating $1,500 per month in income, but your expenses are $5,000 per month, you're already 30% of the way to full freedom. That number matters. And when you hit 100% coverage through automated income streams, you are now financially free, no matter the market conditions.